Hi, Dean Jenkins with FollowMeTrades.com here, and this is a weekly update for the week of July 13, 2015. You know, it's amazing how fast the attention of the media shifted from Greece. Last week and earlier this week, it was all about Greece and the referendum and are they going bankrupt and the effect. Now the attention has shifted to China, and that's probably appropriate. I heard this interesting report last week, this statistic that said the amount of capitalization that was lost in just a couple days of declines in the Chinese market was equal to 6 times the entire GDP of Greece. So China's way more important. Greece is kind of an emotional issue, but China is a big part of the world economy. Um, but that's what that gives some perspective regardless of the headlines. The headlines are interesting, they are entertaining, they bring our attention to important issues, but we base our trading and our investing on the realities of the price on the actual charts themselves. We're looking at the Dow Jones Industrial Average, and I just wanted to recap this um, the the amazing bull market that we've been in. So here's the decline from late '07 to early '09. And then we've been in this bull market since early '09. And any trend, in this case a bull trend, is defined by a series of higher highs, higher lows, higher highs, higher lows. As long as these lows aren't taken out and it goes higher, that's what defines a trend. And you can see it gets kind of boring. It goes up, does this. Okay. So what's it going to do next? That's the big question. You can see that we're in what's called a period of consolidation. This is flattened out here, and the momentum, the magnitude of this uptrend is beginning to lose steam. So it's possible that we could go on to make another high or two, very minor, and it's also possible that we could be beginning the correction, a bear trend. When that happens, you can see it's more dramatic and faster. The market comes down faster than it goes up. This dramatic correction, '07 to '09, which was about a year and a half, it moved down much faster than the uptrend. So when that happens, we will have things that we can trade, that I will be trading, things that we can buy and go long on actually, that will be making a lot of money, and our profits will be uh, really good when the dramatic correction happens. When it does happen, here's the levels that we expect it to go down to. These are called Fibonacci retracement numbers. These are statistically based from a mathematician from the Middle Ages, and they have held in the stock market since the stock market has, we've really brought technical analysis to it. You can find out more about Fibonacci levels, Elliott wave, techniques that I use on my website under information. I talk quite a bit about that. But we do expect this correction to get down into this zone somewhere. The middle would be 12,444. That's a dramatic correction, and the buy and hold folks are going to take a big haircut, 30, 40, 50% haircut. We're not going to do that. We're going to be trading the realities of the market and trading according to what it's telling us. Here we are zoomed in on the last few months worth of price action. I've been talking about this level as being key. And I said if we broke through this level, that it would be a warning. Well, we did break through this level. So what does that mean? It means it's a warning. A couple different scenarios could play out here. As I mentioned, we're in a consolidation period. This is a very mature trend. So we've made a low, made a high, made a low. This could come down and make a high and then go down and make another low, make a high. If this high is not taken out, and if this low is taken out, then I'm going to say we're in a bear trend, and it has begun, particularly when we go through this level here from February 2, the 17037 level. If we go below this low, we have this sequence of lower lows, lower highs, lower lows. We're going to be in a bear trend. That hasn't happened yet. It hasn't proven itself yet. There's an alternative thing that could happen, and that is we've come down, we could go up and do something like this, and if we take out this high here and we stay above this low here, we could go on to make new highs. That could surely happen. I give it about a 50-50 probability either way. 50%. That's tough to draw with a mouse here. 50%. Nobody knows exactly what's going to happen. We have probabilities. We have the reality of the charts here. So I think it right now is 50-50. Could go up and make new highs, or it could be over and it could go down. Because of that, I'm splitting my positions between long positions and short positions right now. And regardless of whether the market goes on to make new highs or whether the bear trend has begun and we start going down, if it's going down, there are still stocks that will keep going up, counter to the trend. And if it keeps going up, there are stocks that are already mature and showing very bearish patterns that will go down even if the market continues up a little bit. So I think it's a good strategy. I make my trades based on the realities of each individual chart that I'm trading. It's important to follow the big trend here, but I trade the realities of each individual chart. So it will be interesting. I'll provide weekly updates, both on the broad market like this and then on the individual picks. So stay tuned, and I look forward to hearing any feedback you have, your questions, and we'll just let this play out. And we're going to be trading it and making profits either way based on the realities. Thanks.